Dealers, could there be untapped revenue on your lot? Protective Asset Protection works with dealers to unlock new revenue streams through reliable protection products across most vehicle types. Visit protectiveassetprotection.com/automotive news to learn more.
Welcome to Daily Drive for Tuesday, August 11th, 2026. I'm Kellen Walker in Las Vegas. Today on the show, Unifor wants GM to build more trucks in Canada as the two sides open contract talks. GM sells its stake in a billion-dollar battery plant, the latest step back from EVs. And Toyota and Honda aren't just building in America because of tariffs. They want a bigger piece of the market. Plus, why the used vehicle market isn't delivering the affordability relief buyers were counting on.
AutoNation's scenario I thought was really intriguing. They're selling used vehicles priced above $40,000 more than the vehicles below $20,000.
Let's run through all the news you need to know to keep up in the auto industry. Unifor has opened contract talks with General Motors, and the union is pushing to add GMC Sierra production at GM's Oshawa assembly plant in Ontario. Unifor President Lana Payne says GM's Canadian sales to production gap is too wide to ignore. The automaker sold about 300,000 vehicles in Canada last year, but built only 130,000. Unifor is targeting August 21st to wrap up a new 3-year deal before its current contract expires in September. Meanwhile, GM is selling its stake in a nearly $3.5 billion Indiana battery plant to South Korean partner Samsung SDI. It's the latest step back from its electric vehicle ambitions. Samsung SDI will take full ownership of the new Carlisle site and operate it as its first standalone North American manufacturing hub. Samsung says the two companies also reached a deal to jointly develop next-generation prismatic EV batteries for GM's future lineup. It's the latest reversal for GM, which has now taken $11 billion in write-downs on its EV program. And when it comes to Japanese automakers expanding in the U.S., it's not just about tariffs. Toyota and Honda are also expanding U.S. manufacturing because they want more market share. Toyota is breaking ground on a $3.6 billion plan in San Antonio, while Honda is exploring an 8th North American facility. Analysts say any growth will come at a competitor's expense, since the U.S. market isn't expected to grow. Here to talk more about it is our own Larry Velaquette, who wrote about it on autonews.com along with Atlanta Bureau Chief Urvash Kakaria. Larry, sir, welcome back to Daily Drive.
The legend is happy to be here, Kel. I'm not Larry Legend today. Okay.
Oh, you are. You're always Larry Legend, but it doesn't even have to be spoken. We just know you're Larry Legend. Okay. So, Mr. Legend, what are Toyota and Honda saying about their ambition to grow market share here beyond just fighting tariffs?
What we did in the story is we kind of looked at the underlying math, right? Because it's more than just avoiding tariffs. Although at $8.6 billion a year for Toyota, at least, you know, that plant's going to have a pretty short ROI. What we're looking at is why they're building plants in the U.S. And the reason comes down to ambition. These Japanese automakers, along with Hyundai, Kia, and you know, to a lesser extent, the Germans, they think that they can grow their market shares in the U.S. And so they're making these plans, they're making their investments based on the notion that they think that they can grow. Now, the ugly part of that math is that also means, if they're going to get a larger piece of the pie, somebody else's pie is going to shrink.
So Honda is exploring a new plant, but analysts are saying the math only works if demand sustains 200,000 extra vehicles a year for decades. Now, how confident is Honda that the business case is actually there?
Well, right now, we don't know because they haven't yet pulled the trigger, unlike Toyota. Honda is, of course, the beat of my colleague, Urvash Kakaria. And this was his portion of the story. This along with Nissan, which he also covers like a glove. I think what Honda is saying is that, yes, the analysts are saying they're going to need 200,000 additional vehicles a year to justify it. But the fact that they're considering it, that they're this deep into considering it, lets you believe that they think that that's sustainable. They are not going to open a plant based on their 46 years of being building vehicles in the U.S. They are not going to build another plant unless they think it's going to run efficiently and near its capacity.
Interesting stuff. Larry Legend, sir. Also, one of my co-hosts of the Weekend Drive podcast. Thank you so much for joining me, sir.
Thank you, Cal, and we'll see you this weekend.
Coming up, the used vehicle market was supposed to be the pressure valve for the new car affordability crisis, but supply is tight, prices are staying high, and the cheapest vehicles are the hardest to find. That's next on Daily Drive.
Dealerships today face tighter margins, shifting consumer expectations, and affordability pressures tied to broader economic uncertainty. At the same time, consolidation and digital retailing are changing how products are sold and supported. That's why many dealers are re-examining how asset protection fits into long-term profitability and business goals. For more than 60 years, Protective Asset Protection has worked alongside dealerships across the country, delivering trusted F&I solutions like vehicle protection plans, maintenance programs, limited warranties, guaranteed asset protection, and more, helping dealerships generate revenue while helping customers protect what matters most. In addition to protection products, dealers have access to programs, tools, and proven training designed to support a wide range of business models. From digital retailing capabilities to dealer wealth building programs, Protective's approach is centered on partnership, giving dealers the flexibility to explore what fits their operation today and how it may support growth over time. If you're a dealer and interested in tapping new revenue streams through protection products, get in touch. Visit protectiveassetprotection.com/automotive news. That's protectiveassetprotection.com/automotive news.
Welcome back to Daily Drive. I'm Kellen Walker. When new car prices spiked, the assumption was that the used market would pick up the slack. Buyers priced out of showrooms could at least find something more affordable on the secondary market. But that pressure valve isn't working the way the industry hoped. Supply is tight, used prices remain stubbornly elevated, and the segment where buyers need relief the most, vehicles under $20,000, is also hardest to stock. Our own Mark Homer and the Automotive News retail team dug into how the country's biggest dealer groups are navigating it. Mark sat down with our own Jake Neer.
Mark Homer, welcome back to Daily Drive.
Thank you. It's great to be here.
This is really interesting, Mark. I mean, as we've been talking about this affordability crisis, we have been assuming that the used vehicle market would be sort of a nice pressure valve for that. You know, if people were priced out of the market, at least they could go to the used market, right, and get something more affordable. But that story seems to be flipping. How did we get here, and what's driving prices higher in the used market?
That would be an issue of supply, but there's a lot of twists going on. And because of the affordability crisis, more people want used vehicles. But because some of the dealerships and the larger dealership groups in particular are having trouble sourcing enough, that means what's left is going to be costing more.
So Cox Automotive is projecting that about 141,000 more vehicles will come off lease this year than last. How much of a difference can that realistically make? Which dealers seem best positioned to capture it?
That can really, really make a huge difference. And in addition to that, a lot of EVs that were on lease are going to be hitting the market. So all of those things will give customers more choice and will give dealerships more vehicles to sell. I think some of the big six are in a really good place, though, to benefit on a large scale if they can tap into that volume.
Speaking of the big six, you write that there's a real split in strategy among those groups. Asbury pivoted away from maximizing gross profit toward volume, whereas Lithia and AutoNation are actually posting higher prices and profit per unit, even as sales drop. So what does that tell you about where each company thinks the market is heading?
Well, I think there's a consistency that they see used vehicles as part of their future because new car prices are going to keep going up for the foreseeable future. So used vehicles have to be part of that strategy. But what's different is how they're trying to find them. Some of them are counting on the off-lease scenario and the cars, all those vehicles hitting the market. Some of them are just trying to source differently. They're buying directly from consumers. They're going online. They're accelerating their use of auctions, that kind of thing.
It's really interesting. Is there anything in those strategies that really struck you as being interesting, especially the way that they're diverging?
AutoNation's scenario I thought was really intriguing. They're selling used vehicles priced above 40,000 more than the vehicles below 20,000. The supply of the 20,000 and below is down. And so they have more expensive used vehicles. And because customers are so desperate to find something more affordable, they're grabbing anything they can. So even those more expensive used vehicles are doing well on the market.
Yeah, that sub $20,000 segment keeps coming up, it seems like, as the biggest gap in used inventory. As you mentioned, AutoNation's CEO called it out directly. So what is it about that tier that's so hard to stock? It's pretty much what you said, right? That there's just not enough of it, and as soon as it hits the lot, it's off the lot.
It's gone. And so here we are. I mean, I can tell you my own family situation. We have a vehicle that's 13 years old. And in any other universe, it would have been sold or traded in a long time ago. But the replacement would be so much more money, and we treat our vehicles well that it just makes sense to keep it. And so customers aren't going to get access to that vehicle anytime soon.
There was one bright spot, it seemed like, and that's Sonic's Echo Park. You saw used vehicle sales up 10%, while competitors were down by double digits. What is that about? Why is Echo Park doing better in terms of that percentage increase, at least? And is that model something that the broader industry could learn from, do you think?
Well, I think so. They are basically just sourcing more used vehicles off the street rather than at auction. So rather than going there and bidding for vehicles with every other dealership, they're just directly just buying them up. As soon as they see them, they grab them. And that's a more direct and more aggressive way to build inventory, and it works for them.
I am curious, just to end things off here. You did speak with dealers for this piece, and what were some of the things that stood out when you were talking to them in terms of where they're now and what the strategy looks like going forward?
Well, this was by our retail team, so not just me. But I think, well, it struck me that how diligent they are and how bullish they are that they can build their used vehicle inventory, even though this is a continuation of the first quarter where they have this strategy and it's not necessarily bearing fruit yet because the market is what it is. They're confident that it's going to turn in their favor in terms of used vehicles, but I do wonder if the trend will continue for the third quarter.
Mark Holmer is a reporter at Automotive News covering retail and retail tech. Mark, always great to hear from you here on Daily Drive, and great reporting on this package.
Thank you. My pleasure. And the retail team.
And the retail team. Shout out to everybody over there. Thank you.
Mark Holmer, retail tech reporter for Automotive News, spoke with our own Jake Neer. That's Daily Drive for today. I'm Kellen Walker. Thanks to our own Larry Belaquette and Urvash Kakaria for their reporting for today's podcast. We also had reporting from David Kennedy of our sibling publication, Automotive News Canada. You can get the latest news on the used vehicle market, Japanese automakers' U.S. expansion, and everything happening in the auto industry at autonews.com. We'd love to hear from you. Let us know what you think of the show and the topics we covered today. Send us an email at dailydrive@autonews.com or leave us a voicemail at 313-444-2774. And if you enjoyed the podcast, remember to like, leave a review, and subscribe so you never miss an episode.